This podcast is designed to help advisors better understand Bitcoin, not just as an asset, but as a growing part of the conversations clients are already starting to have. In today's episode, I'm joined by Jim Krider, founder of Intentional Living Financial Planning. We discuss how he integrates Bitcoin into financial plans, the realities of fiduciary duty when clients have self-custody of their Bitcoin, and the gaps in advisor education that leave clients underserved. But before we begin, please note, nothing in this episode is financial, legal, or tax advice. As always, please consult with your own professionals before making any decisions. Okay, let's get into it. Alrighty. Thank you all for joining us for an episode of the Bitcoin Suits. My name is Jordan Gass. I'm a CPA and I love Bitcoin, work in Bitcoin as much as I can, I guess. Today we have on the show Jim Krider. Jim runs a financial planning outfit called Intentional Living. And today we thought we'd jump on post Vegas and we would kind of talk through. Really, the point of today's conversation is to chat through some things Bitcoin related, but really the main focus of our show is to help financial advisors, accountants, people in the professional industries out there either learn about Bitcoin or connect with other Bitcoiners in their space, and then also lastly learn about tools that they can be using to help their clients when it comes to Bitcoin custody and potentially Bitcoin mining with the tax implications. Maybe Jim will talk about some politics stuff on the big, beautiful bill. So anyways, Jim, thank you for coming on. Maybe give us a quick intro in addition to what I just talked about. I know you were a speaker last week in Vegas, and I don't think that recording's come out quite yet. So I didn't get a chance to listen to it. I was on a call at that same time. So maybe give us a quick intro of how you got into Bitcoin and what did you talk about in Vegas? Because I'm curious.
Yeah, no, I appreciate you having me on. Let's see, I guess a little bit more about me. You didn't highlight. Yeah, like I own a financial planning company. There's a handful of us here. We serve clients across the U.S. Worked in the industry for about a decade. I started my financial planning shop about four and a half years ago. I'm married, have 4 kids, so stay pretty busy chasing the family around. As far as Bitcoin, how I got into that, I mean, I first heard about Bitcoin in 2012 from a guy I worked with who he asked our boss to pay us in Bitcoin. I dismissed it at that point, and started hearing about it more again in 2015, 2016, and viewed it more as a speculative, more of like a stock. And then finally actually really understood it in March of 20. So March of 2020, decided to really like go down the rabbit hole. Fortunately, I was already familiar with other assets to a high degree. And so I really started weighing out, all right, if the government, it was right before the COVID shutdowns, but it was during the talks of that. So like, all right, if the government can shut down the economy, yet there's talks of them still making sure that everyone can stay afloat by giving out money, that shouldn't work. So something's wrong with our money. So what's a better form of money, and what will this lead to? So I really started doing a deep dive on, again, I'm already very obviously familiar with stocks and bonds and real estate, and then did a deeper dive on gold and Bitcoin. And pretty darn quickly came to the conclusion that Bitcoin, in my opinion, is a superior asset. So at that point, I moved basically all of my money and my wife's money into Bitcoin. Went down the rabbit hole. It was tough. I was another RIA, or registered investment advisor firm at that point, and I was on the investment committee, and I regularly talked with the other people on that group to try to get them to buy some Bitcoin for our clients, but was shut down on a regular basis as well. So finally, when I started this company back in early 21, Bitcoin wasn't a core principle of how we do things. I view Bitcoin as any other part of financial planning. Financial planning is not investment management, but investment management is part of the financial planning. Same thing with tax planning and those sorts of things. So Bitcoin is not a financial plan, but I think it should certainly be integrated. It just happens to stick out like a sore thumb because it's unusual right now. So, yeah.
Yeah, that all makes sense. So prior to, I mean, I think for people listening in our audience, probably had a very similar experience of you are even afraid to mention Bitcoin in some ways from a professional, I guess reputation risk. And I was like, I'm similar. Well, it sounds like you weren't afraid, but you just have to go at it a certain way because you're going to get weird looks most likely, right? But now it seems like I was just watching a video a little bit earlier, sailors on CNBC, and those are becoming more and more regular appearances. And but it's still funny. I talked to a lot of financial advisors. I even had a guy over last night. Him and his family were just joining us for a dinner, and he's like, I get it, I think, but also it's not gonna. I don't think it's coming, into the real mainstream until 10 years from now. I'm like, brother, I think we're here. So yeah. Anyways, I totally understand where you're coming from, and really, in some ways, we've all had to just kind of push forward on our own path outside of those traditional jobs, just because it wasn't made available to educate clients on that. So, but that's one of the main reasons for the show. Is my main thesis, I would say, is that people make their decisions financially really based on the recommendations of guys like you and guys like me, right? They don't have time to dig through all the nitty gritty details of our industries, and so they kind of lean on us to make good, sound decisions. And so I think it's a duty on us to educate financial advisors out there who still only know about it from what Jim Cramer says, right, or something like that. So, yeah, maybe tell us a little bit more. I know I think I caught the title of the Vegas talk. I mean, it was Bitcoin and financial planning, but maybe give us a high level of what you all discussed on that stage.
Yeah, so the title of the conversation was "What FIRE Gets Wrong About Bitcoin." So FIRE being financial independence, retire early. So that was the title, and we followed that loosely. But yeah, we spoke to just like, yeah, I guess that along with like specifics. So one thing I spoke to is, um, I think that a lot of people who don't understand Bitcoin, obviously they're going to have their assets in something else, other their value parked in other assets. And if Bitcoin does what I think it'll do, and what I'm assuming you think it'll do, in real terms, not nominal terms, but in real terms, that would necessarily lead to the value of other assets going down, in order for the value of Bitcoin to go up. Again, they can all go up nominally. If the U.S. prints $50 trillion tomorrow, everything could go up in price, but down and stay flat in value in reality. But if the U.S. prints 50 trillion and 40 trillion that goes to Bitcoin, and 10 trillion gets divvied up amongst real estate, gold, stocks, bonds, currencies, collectibles, all those things, they went down in real terms. So I think that's a large risk that a lot of other people who are investment managers and DIY types are missing out on, is the what if I'm wrong in that narrative. It is a point of frustration for me, and maybe this is like coming out too hard on your audience, and I certainly don't mean it to be, but I would say it is a point of frustration that there's so many people who are fiduciary financial planners, that their job is to have a trusted role with their clients' financial lives, yet dismiss Bitcoin off of silly arguments that were dismissed 8 years ago. And we're getting to the point where that's no longer acceptable. If you're going to
Yeah.
have a reason to not own Bitcoin, it should be a valid reason, not some silly argument that was dismissed 8 years ago. Yeah, so that is really frustrating to me. Yeah, I'm
So
not
you're
saying
telling
that
me, Jim, that the government is not going to ban Bitcoin?
probably not. Or
I agree.
gosh, I see this all the time. I used to be active on some like forums for CFPs and stuff, and try to talk about Bitcoin, not to like shove it down people's throats, but literally just like, hey, have you considered looking at this? I thought these people were open minded to helping their clients, and just people jump down your throat with, oh, it's Beanie Babies and tulips, and it's so silly. It's like, dude, like in 2013 called, they want their arguments back. Like,
Yeah.
God, drives me nuts. Again, I'm not
So
saying that you and all of your clients should only own Bitcoin, but please have a more articulated argument than it's Beanie Babies. Like, oh
absolutely.
yeah, I forgot that Beanie Babies have a finite supply, and you can send a Beanie Baby from here to there instantaneously for almost zero cost. And oh yeah, I forgot that Beanie Babies, they're not controlled by by a company. It's decentralized, and anyone like who can run a node and verify it. Like I forgot that Beanie Babies has those qualities to them. Oh yeah, they don't. So sorry, go back to your argument again. I hate that
Right.
trash. It ticks
Right.
me off.
No.
I don't care
Yeah.
about you as the individual. It's the fact that you are serving hundreds of families, and there are hundreds of thousands or millions of families who are trusting people to have done the research and are not being told the proper, or at least they're not even come to them with research being done. And I don't expect, like, it's impossible for me to think that every financial advisor or any financial advisor has assessed every investment possibility known to man. Like, oh, well, Jim, you can't say about Bitcoin because what if there is a uh, private equity fund that has outperformed everything, including Bitcoin, and what you think will do so into perpetuity, and you're not recommending that thing? It's like, okay, I'm not referring to that. That would be a case for Bitcoin several years ago. Now we're hearing about Bitcoin regularly. And if you're going to dismiss it regularly when it's in your face, I think that we're getting to the point where like that's on you.
Yeah. No, I agree. So I guess talk us through. Do you mostly have clients at this? Like, let's talk about new clients. I guess someone, and maybe you're not taking new clients, but if you had someone who is coming to you for the first time, are they generally coming to you from an angle of, hey, I've already researched Bitcoin. I found you because my other shop that I was working with, they just weren't interested. They weren't educated on that. Or is it something where you're taking a proactive approach with, call it normie clients, to say, hey, I want to tell you about this thing. Just want to make sure you're educated about it. And you don't have to make any moves in your account, but I just want you to know about it and understand the underlying technology that's here.
I would say neither of those, but yet both. So we purposely don't talk about Bitcoin on our website. I don't like if your grandparents or parents or family or people you care about who aren't Bitcoiners were shopping for a financial planner. Like I need help with retirement planning and tax planning and all those things, and they pulled up some bro who has like Bitcoin on their like part, like, on the front landing page of their website. They're gonna close out that tab and move to the next guy. So
Hmm.
I don't do that. So we don't lead with Bitcoin. But that's certainly something that comes up. Once we've established trust, we've shown that we are intelligent and can bring value in other areas. So like tax planning, estate planning, retirement planning, those sorts of things. Like, okay, these guys aren't morons. Then once we feel like we have that credibility, then we'll bring up usually when it comes along with the investment type of conversation, then we'll bring up, hey, there's something you should know about us and how we view money, how we view economics. It's this Bitcoin thing. Let's talk about that. So it's not a leading part, but it's certainly a large part. And we do that for going back to your initial base question of who do we serve. So yeah, we are bringing on clients, and that is because like I could stop bringing on clients today, pay myself a great salary, work a few days a week, and it would be awesome. But the problem with that is for every client that we don't bring on, the chances are they're going to go to some goober down the road who's going to like probably not do the type of depth of planning that I think they should be done. Like I'm not saying we're the best financial planners. I think we're really good. If I didn't, I wouldn't have people work with us. But their chances are they're going to go to some goober down the road who's going to like stick them in some mutual fund 60-40 portfolio and talk to them once every 2 years. They're not going to help with tax planning or assessing the real estate holdings or do those other like life planning types of things. They're not going to understand Bitcoin to the same capacity that we do. And because of that, like that motivates me to keep bringing on more clients. I want to make a large impact on a lot of people. So yes, we're still growing. Now, the people that we generally bring on, generally our marketing is towards normal people. So again, we don't lead with Bitcoin or even talk about Bitcoin on our website. Google stuff isn't really about Bitcoin typically. So yeah, regular clients who find us, they're looking for a financial planner. Now, with that said, I am on podcasts pretty regularly that are usually Bitcoin adjacent or Bitcoin focused. And when that happens, there will be a wave of new clients who are very Bitcoin friendly. And then, yeah, those are people who like, hey, I have this money. I've tried to be patient with my financial planner for the last 10 years and he's dismissed me over and over again. And I can't take it anymore. So I need someone who understands Bitcoin and who sees things how I see them and who can manage our total financial life in light of how we view money in Bitcoin and who can consider Bitcoin with our planning. How crazy is it? Most planners, they're like, well, I don't know how to put Bitcoin into our Monte Carlo software. So therefore, we're going to pretend it doesn't exist. So suddenly $800,000 of your $3 million net worth is not even considered anymore.
Hmm.
Like, all right, well, that's probably not the best solution, but they don't know how to plan around it. They don't know, like, do you consider it at what growth rate? Do you construct a portfolio around this large core portion of your portfolio? And if so, like what should be held? So that's a lot of people who are already Bitcoiners come to us to solve for those things, let alone the Bitcoin specific technical side of things, the wallet, the estate planning type that applies to Bitcoin more so, and all those fun things.
Yeah. Okay, that makes sense. I know one of the questions that I'd pose to you that's kind of on my mind is this whole, it's a Twitter argument, I guess, amongst Bitcoiners specifically, but how do you think a financial planner should approach the fiduciary duty, I guess, to if someone has Bitcoin or they just want exposure to Bitcoin and this whole IBIT versus, a more self-sovereign, I guess, how do you walk through that approach with a client, and then also talk me through on top of that maybe the fee structure, because that's always been on top of mind for me. Is it seems like at least for an investment advisor who's taken 1% of the asset value per year as their fee, how do they make money on a self sovereign stack of Bitcoin that's held in a multi sig by a family?
Yeah, so the fiduciary side of things, we could try to answer the fiduciary question through a few perspectives. One, we could take it a legal way, like, all right, what is the legal definition of fiduciary? How could you handle it? You can also take it through a humane perspective. Like, I have to also not only answer to regulators, but also like my conscience. Do I actually believe I'm doing what's best for each and every one of our clients? And if I can't say yes to that, then I should probably step down, or at least step down with that family that I can't say yes to. Now, so that does impact. Like, the majority of our clients do on Bitcoin that is on cold storage, self custody type wallets. That's not something that we collect an AUM fee on. And that's totally fine, because for them, I think they should do that. And I'm not going to sacrifice what I believe is best for them in order for me to collect extra 1% fee on that. If that's the case, then I'm serving myself over my clients. We do have clients who also have Bitcoin exposure, be it through ETFs and other like Bitcoin proxies that are in accounts that we actively manage. And how I can justify that is a few ways. One, would they have otherwise had exposure to this asset had it not been through that means? Okay. Also, is there a purpose that we are actively managing that rather than grabbing Bitcoin and putting in cold storage? Active management could be, regards to weighting against other portfolio holdings and rebalancing, or trying to actively manage it for timing perspective, or several things there. And if I could say, yeah, there's a particular reason that we want to hold this in an investment portfolio rather than cold storage because of X, Y, or Z, then I can sleep well at night knowing that. So I'm fine either way. I'm not saying, yeah, as far as the fee types things go, yeah, if I charge 1% on everything you own, including your Bitcoin that's in cold storage, I'd make a whole lot more money. But I can't justify like me making you charge or pay me 1% to babysit like your wallet. Like, we'll speak to that. I want to make sure that your Bitcoin's being bought in the right manner, that's being stored in the right manner, that it's secure and safe, both for security purposes and estate purposes and husband and wife communication purposes. But um, it's a vector of, how much value am I bringing to that? Value is simply benefit minus cost. And if the cost is greater than the benefit, there's negative value, and we shouldn't work together, at least in that capacity. Or if I believe like, the benefit would be greater through another service provider or service, for a equal or lesser cost, there is more value in that other service. So therefore, you should pay them for that rather than us. And
Okay.
I want to make that assessment for each of our clients in every way we can.
Okay, so you generally don't venture into like Bitcoin consulting. You would outsource if someone came to you and said, I've got some Bitcoin on Coinbase. I figured out through my education I need to I need to move this out of here. Can you help me?" Do you generally, like on some more technical stuff like that, would you outsource that to a trusted, I guess, consultant that you know of, or is that something that you all tackle in house?
We'll tackle that as well. So
Cool.
again, we're not charging on, it's not asset under management, but it's certainly an asset under advisory, and something that we're speaking to. Just like if you own a real estate portfolio, be it if you're an LP in a syndication, or if you own a duplex, it's like, hey Jim, should we, like, we've had clients who are weren't with us prior to buying, like when they bought these things. And now we have clients who are coming to us like, hey, a few years back, I bought into this syndication and it's underwater and there's a capital call. Do we pay into that capital call or not? I'm not going to sit here and be like, oh, not my job because I'm not getting paid on it. It's like, that's such a trashy way to do it. It's like, okay, those are the people that I don't want our clients to go to who would say that. Like, my job is to help you anywhere and everywhere that your life and your money intersect. So of course we're going to look like, we're going to analyze that to stay with that example. Should you participate in that capital call or not? What's the risk? What's the opportunity? All those fun things. Same thing with your Bitcoin. Like, all right, you own your Bitcoin here. It should be here. How do we address this? Be it, maybe we had some families who had a lot of Bitcoin on, was it Robinhood? It's like you can move $5,000 of Robinhood Bitcoin per week. And like, we had clients who had hundreds of thousands. Like when Bitcoin was at like 20,000, it was like, all right, if Bitcoin goes up a bunch, you literally will never be able to get all your Bitcoin off Robinhood. So how do we get it off of there to a cold storage wallet in the best way possible? It's like, all right, well, to do that, we have to look at all your Bitcoin you've ever bought, both on Robinhood and other exchanges, and know what we can transfer versus what we sell, looking at tax loss harvesting and offsetting capital gains and all those things. And moving forward, where do we buy it at? And what device do you use? Do you do you keep it on the exchange? Do you move it to a hot wallet? Do you put it in a single device? Do we use multi-sig? And if we use a multi-sig, which company? Is it like a CASA or Unchained multi-sig? Or are we talking about a multi-institutional multi-sig, like a on-ramp or the Bitcoin Advisor? Like, yeah, these are all conversations we have like every day. Okay. That's fun because that conversation will come like right also in line with like, hey, Jim, we're starting a business. How do we do that? Like, what do we do with this business setup? And it's like, oh, so we're talking about entity formation and all that stuff. Then we'll move into like nerdy Bitcoin stuff. And then we'll talk through like, oh, we also found out we're having twins and like, what do we do for that? Like, so it keeps you on That's your toes. Awesome. It's like working Absolutely. A giant puzzle all day. It's exciting.
Yeah, absolutely. I think that our jobs are probably similar in that way. And I remember my very first boss when I got into public accounting, he was like, yeah, and your days are never going to look the same. And maybe even to a much greater extent, your days never look the same just because there's so many different facets of the planning process, right? So that's really cool. I'm trying to think, we could kind of take it a couple different ways. I'm tempted to get your thoughts on the budget bill. And just obviously Twitter exploded yesterday. So I assume you saw a couple things, a couple memes, right? So, but I want to kind of get to the core a little bit, actually. I mean, obviously it's in some ways it's funny, in some ways it's sad, but really what the whole argument boils down to between really the two factions of the Republican Party right now is kind of this whole thing that we've been arguing with Bitcoin for a long time, right? Of the government can't keep spending more than it takes in. And so there's that like Thomas Massey wing, right? And then there's the realist, or not realist, I guess pragmatic wing, right? That's like, well, we're in power. And if we don't pass something, taxes go up at the end of this year. So I guess, how do you see the situation just broadly from a fiscal, and how does it play into the Bitcoin narrative more broadly? I mean, is Elon going to become a Bitcoiner now officially?
Man, I don't know. It's funny. I was like, literally, we were in back-to-back meetings the entire day yesterday, and then took my kids to a water park yesterday afternoon to the evening, got home, dinner, all those super fun things. And it was like, I was feeling a little bit under the weather. Finally, about 9:15, I just laid down in bed, which I never get in bed before like midnight. So I was like, oh, I feel like trash. Lay down. I got on Twitter and I was like, what in the world happened? Like, what is going on? I was out of it yesterday, actually, from any of these things. So, yeah, pretty wild stuff. As far as like what's going to happen with, TCJA and Big Beautiful Bill and all that stuff, like, I don't know. It's getting to the point of frustration though. Like, we're trying to do tax planning for our clients, and it's like, all right, like, just continues to drag out as far as like, should we go ahead and do a lot of heavy Roth conversions this year because this is it, or we're going to have 4 more years of being able to do Roth conversions. Therefore, we can space them out. And yeah, what's going to happen regarding the money printer? Like Lynn Alden's whole thing of like nothing stops this train. I think ultimately we will need to print this away. I would assume. Like I don't see how we can actually get our budget down enough to make a dent in this overall. I think that sorry, a bird just ran into my window. It was okay though; it flew off. Um, yeah, I think it will have to come to money printing. We have a lot of debt. Unfortunately, we have a lot of interest. Obviously, we're all familiar with the amount of interest that we're paying right now. And unfortunately, a lot of that is being paid at lower interest rates than it would be paid at if we had to refi it today. So what's going to happen there? What's going to happen with interest rates? What's going to happen with the spending? The whole saying in Bitcoin, like everything's good for Bitcoin. That's sort of, I have that thought. The question is it good for Bitcoin over the next 5 months, or is it good for Bitcoin in 5 years, or both? That's a wait and see.
Yeah.
If we decide to turn the money printers on and just boost everything up, I think Bitcoin will largely participate in that. If things get really hairy, then Bitcoin will probably largely participate in that. There's an off chance that things get really ugly in the macro system and Bitcoin is the safe haven. I don't think we're really there yet. Maybe I'm wrong. But yeah, I don't know.
Yeah.
Keep a pulse on things.
Absolutely. Yeah. It's just so interesting because I think, a lot of people who voted, well, there's this argument of people, they understood that Trump was never going to cut Medicaid, Medicare, Social Security. So you shouldn't be surprised, basically, that the spending levels are not going to go back down to 2019 levels, pre-COVID. So I kind of, I agree with you that I think it's good for Bitcoin. It is hard to do tax planning. I've had to caveat just about every call over the past 3 or 4 weeks saying, yeah, well, I'll have to see if whenever the bill gets passed, and hopefully gets passed. Because I'm kind of in the camp, if we don't pass this bill, then I think the markets have it priced in that that it's going to pass. So if it doesn't pass and taxes go up and inflation's not totally conquered yet, and we're having we're having issues with issuing bonds, then I don't know. So okay, so that's good. There's a couple other things. What's your time, by the way? We never really talked about a time
I'm
limit.
good.
Okay, cool. I just want to make sure I was cognizant of that. So there was a lot of talk in Vegas, obviously, on stable coins. We could kind of talk through that a little bit. Conversation with that guy over at my house last night went into that. Just one more example of, again, a guy who's in the financial advising space day in and day out, did not know what a stable coin was. That's he was almost like, oh, I didn't know any cryptocurrencies were, they're not stable. Obviously, they're very volatile. I'm like, well, yeah, of course, but there are actually, you know, cryptocurrencies, I guess you call them, that are tied to the dollar, right? So it sounds like, in my understanding, that's kind of a get out of jail free card a little bit for the Treasury to be able to sell some of these longer dated bonds. Is that how you see it? Are you, as the U.S., looking to the stablecoin market to I guess provide relief on being able to issue more debt and kick the can down the road a little bit more longer?
Yeah, the problem is, we saw this 2 months back with the tariff stuff when the market dropped a lot. Like theoretically, at that point, bonds should rally and do well and buoy against stock price drops. But I think we're starting to get called on our bluff, and people are starting to recognize the underlying fault lines with our environment from a debt and because from a debt perspective. So yeah, even if we're able to go in and do things that should theoretically drive the bond prices up, like we drop interest rates, we convince Tether to buy a bunch more bonds, or stablecoins a bunch more bonds, or like we somehow strong arm BRICS nations to stay on the petrodollar system, and you got to keep buying more debt. again, I think we're to a point now where it's like, yeah, uh, you can make us, but I don't know. I think people are starting to recognize that there's not like U.S. debt is not risk free. I mean, heck, was that Moody's or whoever like 2 weeks ago came out? I was like, oh yeah, we're downgrading it to AA. That's wild. And that's
Yeah.
something that Bitcoiners been talking about for a long time. It's like, yeah, stuff isn't risk free. When you look at duration and the dollar that's backing it, like, can you imagine personally being a guy? Like, can you imagine loaning someone money for a house? You loan someone $400,000. Like, all right, pay me back over the next 30 years at 3%. There's That's
Never.
absurd. Like, I don't see how 30-year fixed notes persist in the next few years unless the government comes in and backstops it. And I'm not talking about like Freddie Mac or FHA or something like that. I'm talking about like literally the government mandates, like, all right, 30-year fixed notes bought to you by the government. Like, I cannot be, I would not be a banker who's going to hold a 30-year fixed note on my balance sheet. Like, you better pay me a lot of money. You're taking massive risks with obviously interest rate risk and the the currency risk to which you're going to be paid back over time.
Yeah.
So I don't know if that really answers your question too well, but yeah, will like stable coins being a backstop uh, with money printing? I think we're going to be forced to print money. Again, I'm probably wrong here, but I think we will be forced to print money, and we'll also be forced to be the people who buy that money that's printed. Like, I think we will be the the largest purchaser of our own debt. So the Fed will print, the Fed will buy, and it's going to get, they'll persist into Bitcoin. Bitcoin will be the escape valve for this money printing machine.
Are you tired of tracking your Bitcoin balances and the cost basis for each UTXO set in a spreadsheet? Bitmint has built a tool for Bitcoiners to simplify the reporting process. Whether it's showing your wife where the money went, proving funds to a lender, or building a P&L to see how profitable your business is in sats, Bitcoin gives you Bitcoin native bank statements, a unified ledger for fiat and Bitcoin activity, and precise cost basis tracking for tax planning and reporting. Sign up for the beta now at bitmint.co. Yeah, because do you see it as, I mean, even current long-term bond holders are, I mean, they're lighting money on fire, right? I mean, even today. And so do you see, do you just see, I guess, an escape from those bonds into something like Bitcoin or real estate, and the yields just having to shoot through the roof, right? I mean, that's how that works, right?
Theoretically, I think the government's going to have to artificially push rates lower, though. Like, again, if we're refining $8 trillion of debt this year, we can't afford to refi at 6%, 8%, 10%. Like, what is a market uh, demanded rate? It's not what the U.S. can afford it to be.
Right.
So we're going to artificially push them lower, and no one's going to buy that except for all the people who push them lower because they have to. Like, I think that,
And they're going to do that by printing more money to buy it, which creates a spiral,
yeah,
right?
which puts it where it's like, I don't want to buy that even more now. Like, I don't see a way out of this. And again, I'm probably wrong. Maybe I'm missing something, but like, yeah, I don't see that's going to play out. The only thing we can say is like, all right, bit bonds and something related to that could be make a more smooth transition during this time, but it's going to be tough. But yeah, I mean, yesterday, actually, after this conversation, I'll be uh, finishing up some work I was doing the last few days, and that's for a family we work with, about $80 million net worth. They own a lot of Bitcoin, but they own a lot of other assets, and they've for years they've had their assets with two other advisors, a small, really great boutique RIA, and then a big bank that has big manpower to do all these things. And they hired us about 6 months ago to like check their work, frankly.
Hmm.
And since then, they fired the big bank, and now it's us and that other boutique RIA who's like old school. And yesterday we met. So Wednesday night, I'm looking through their portfolio. They have money. They've got a Q-tip, a non-Q-tip. They have their living trust. They have just their estate itself. So I'm looking through all these things, what they own, where they own it. And we're looking, and it's like, man, they have $9 million of bonds. And so I'm going through like what bonds they hold, what's the rates, how's it done, the duration, all of these things. These people, they make, again, they have, and they make a lot of money. And so they're sitting on mostly muni bonds that are paying like 4 to 5%. But the problem is, like, most of these things are down 1 to 8% since purchase date. It's like, okay,
Hmm.
great. You're getting this 4% yield on a muni that's 12 more years out, and it's tax free. It's like, I guess that's sweet. You know what else is going to be tax free? That massive cap loss you're going to have to realize as well. Like,
Yeah.
yeah, and they're sitting on 8 million. And like, it was funny talking with the wife when the husband loves Bitcoin and the wife didn't. That's one reason they hired me, is like help her understand this thing. And at first she was like, man, I think if you look at a 60-40 portfolio, we have 8 million of bonds and $80 million. We only have 10% of our portfolios in bonds. We're way under allocated. But their goofy other advisors at two other shops didn't help them understand like how to bucket these assets. I was like, dude, like, you're not going to spend all 80. A lot of this is for legacy. Like, do you think that your grandkids will want to hold a bond that still has 22 years left to years left of the term on that thing? Like, probably not. Is we were able to trim down, like, here's how much in bonds you should really have. Here's all the risk associated with it. And then that came to the conversation of like, all right, if we're overweighted bonds, what do we sell those into? And also, like, if they own a lot of Bitcoin, what do we hedge your Bitcoin position into? You know, that's a big question. We talked to a lot of Bitcoiners who own Bitcoin, think Bitcoin's going to go up forever and all that stuff. But it's like, you know, Jim, if Bitcoin goes down for a sustained period of time, which I don't think it will, but if it does, like, what do I own? And the thing is, they just want to make sure that, you know, if Bitcoin goes up a bunch, they're going to be super wealthy. If it goes down for a sustained period of time, they don't want to go work at Home Depot on the weekends. It's like, what do you own? The problem with most of these people is that they are attuned to the money system to the point where they don't want to own the other part of their portfolio is in a 40% mid and long duration bond fund. It's like, and I get it. So
Yeah.
then a lot of our job for these like Bitcoin heavy people is, again, creating almost a satellite portfolio around their Bitcoin heavy stuff. And it's like, yeah, they are, from a philosophical and, I don't know, monetary perspective and macro perspective point, like, view, they're not going to go and buy a 20-year like bond portfolio. That doesn't make sense to them as far as they're concerned. And I personally would agree. You know,
Okay.
there's an advisor I've run into a lot. I overheard him a few years ago. He was in a meeting with a client at a coffee shop in town. And afterwards we talked, and he was like, "Oh, I've been doing this since 1980 and blah, blah, blah." And, you know, I was in my 20s at this point, I think. And he was telling me he has most of his clients in a 30-70 portfolio. And I was like, dude, like, okay, that's great, but not really. Like, what happens? Interest rates are like 1% at this point. What are you going to do? Like, how are your clients getting enough income to pay the bills? And what's going to happen when the Fed raises rates? And his response was, look, I've been doing this since 1980. We've only made money, so I feel fine about it. Like, I want to make
Wow.
sure I'm not, he's viewing that through such a small lens that he got annihilated, but he couldn't
Yeah.
see outside of his little bubble. And I definitely want to make sure I'm not doing the same thing, but from the inverse, from the Bitcoin lens. So I regularly check
Right.
myself. Like yesterday, when I was analyzing this bond portfolio and everything, you know, he had most of this guy's bonds were sitting inside of his non-Q-tip that's already out of his estate. It's like, dude, this is backwards. Like,
Hmm.
probably own that in your estate. But I'm sitting there thinking, like, I'm regularly questioning in that conversation. I'm asking him, I'm asking other advisors, where am I wrong? Because all these, your attorney, your CPA, your two other firms that you work with, all saw this and said, yeah, it checks the box. And I'm sitting here basically saying the opposite. Where am I wrong? I want to ask myself that. I want to stay humble and see my faults. But when I look at that, it's like, I don't think I am, but I'll continue
Yeah.
to ask. And again, that's where my gripe is with most financial planners. They're not even willing to ask, like, okay, what is Bitcoin? And ultimately that comes down to, like, most financial planners and CPAs and people who work in this industry, they generally, they work with money all day. And the good ones are really good with working with money. The problem is they never stop to ask, what is money? And
Yeah.
until you ask what money is, you're not going to see that there's a problem with our existing money. It's like a fish who's been swimming in sludge. You know, it lives right at the dump point of like some waste plant, and it, you know, dumps into the ocean or a lake, and they just stay right in this sludge filled area, and they think it's normal. And they never stop to ask, like, what is water and what should water actually look like? And they think it's nuts to ask that because they feel like they've lived in water and they deal with it daily. So I think
Yeah.
that's the issue, is not stopping to ask, like, what is money though? And when you ask that question, you start pulling the layers back. You realize that our current monetary system is not how money should behave.
Yeah. I agree. Okay. So I want to wrap probably in 5 minutes or so. I've got a couple questions to wrap us up. First being, so, we actually got into Bitcoin roughly about the same time, in 2020, 2021. Um, and I know who I listened to at the time, but now, and there was a lot of noise even then, specifically around other cryptocurrencies, NFTs, all that kind of stuff, right? And so one of the purposes of this show is not only to talk to advisors and accountants and those type of people about what is Bitcoin, but why Bitcoin only. Um, and I would be curious to get your thoughts on maybe just two or three recommendations as a action item for someone who's listening. Where would you go, or where would you send someone, I guess, post this conversation to do a more deep dive, whether it's a book or podcast series, or a specific person that you found very helpful to really, I guess, dive deeper? Because you and I both know you can't learn about Bitcoin in 1 hour, right? Or even in 10 hours. It takes, for better for worse, it takes a lot of time. Because like you said, there's a lot of unlearning about what you thought was water and what water actually is, right? So I guess maybe let's start there. Yeah, where would you send somebody if they're a professional wanting to know more?
Yeah, I guess it sort of depends on like your technicality and personality. Like some people really jive with some or others. Like my person I listen to, I don't listen to podcasts too much anymore. My commute's got a lot shorter, but my go-to person for the longest time was a guy named Preston Pish. He's been in like really more of like value investing and those sorts of things for a really long time, and he started talking about Bitcoin sort of casually in probably 2016 or so, and then 2020 they devoted a show to talking about Bitcoin called Bitcoin Fundamentals. So that's a I like that show. Actually, their first two conversations were phenomenal, and that's something I refer people to a lot. The first conversation specifically related to Bitcoin on that podcast was with a guy named Robert Breedlove, and I think the podcast was Bitcoin misconceptions. And yeah, it just talks about, like, again, it sort of goes to that conversation, like, what is money, what is Bitcoin, those sorts of things. The second episode was a guy named Vijay Bayapati. Really good conversation. So I would probably point you to Preston. As far as books, I mean, there's a few classics like the Bitcoin Standard. It's a good book. Walks you through, even just as important Bitcoin, it sort of walks you through like economics. Like when I was in college, I hated economics, but now and it didn't make any sense. I felt like am I an idiot? But I realize now they are speaking to economics simply from a Keynesian lens, and that literally doesn't make logical sense. Like I'm a very logical person. If it doesn't make logical sense, like I get stuck. It's like my brain keeps at the loading phase if I can't get past the logic. And I don't think Keynesian checks out from just a base logical perspective. And so I'd never even heard of Austrian economics besides like it's mostly just quickly dismissed and then moved forward with Keynesian. So, anyways, Bitcoin Standard, another good book, Gradually Then Suddenly by Parker Lewis.
Hmm.
Lynn Alden's another great resource. So Lynn, she writes a lot. She's on a lot of podcasts. She has a book, Broken Money. So I'd refer to most of those resources. As far as like how Bitcoin works on a technical side, like how do you buy a Bitcoin? What is the blockchain? What is running a node? Like these things, I couldn't find a good resource to help my non-technical brain understand this. So I actually interviewed a guy, it's a friend of mine. His name's Michael Schmid. Michael's a smart dude who's been home mining Bitcoin for a long time. And he heats his house and his hot tub and his water and his neighbor's pool with Bitcoin miners. And he's actually started a company where he's helping people like build out their HVAC system with Bitcoin mining. He's currently working on compressing hot air to be able to turn into cold air, so you can have a full HVAC system with Bitcoin miners. Anyways, I interviewed him. It's on YouTube, just to understand what is Bitcoin from the technical side. And I play the role of someone who doesn't understand the technical side. I play it really well because that's me, and just helping. It honestly is not a commercial, but that conversation was probably the best conversation I've ever heard on just helping a simple brain person understand just the technical side of like, all right, when you say blockchain and you talk about like Bitcoin computer stuff, what does that mean? So, yeah.
No, it's great. I actually had the pleasure of meeting Michael in Nashville earlier this year at the Energy and Mining Summit, and he had his hot tub, and he was chilling in there, and it was just so great, like right there on Broadway. Um, but yeah, they had the hot tub heated at 102 degrees Fahrenheit with two or three miners submerged in some kind of oil. It was very interesting. He definitely inspired me. I need to go hook up my hot tub, unhook it from whatever it's hooked up to now, and hook it up to a Bitcoin miner. But I need to probably engage Michael to at least talk me through it, because I've seen his videos. I'm like, it's pretty in depth what he's doing, but it's cool.
I would
So,
probably electrocute myself if I tried to do
well,
that.
yeah, absolutely. I'm like,
Just
okay,
put the
here,
monitor into the hot tub
talk
with me. All right.
talk to my electrician. You all see if you can work this out.
Yeah.
So no, it's been cool. I've been going to several different events this year, and a lot of mining events. So because I think we've talked a little bit, but we're doing the accounting software, and right now, Bitcoin miners are some of the few that earn in Bitcoin, spend in dollars. So, anyways, met a lot of cool people in that space. So, all right, my last question. I honestly should have asked this question first, because it really is kind of the main reason we do all the things we do, right? Um, I just wanted to get some thoughts on family. I saw you mentioned earlier you've got 4 kids. Maybe any dad advice? I got 2 kids, so I'm a little bit behind you. But is there anything you could shed some light on trying to balance maybe the busy life that comes with I think Bitcoin comes with a busy life, because there's so much to do and it's all actually so fun, but there's a balance, right, as well. So maybe speak to that.
And I'm trying to learn. It's when you're a kid, you think your parents know what they're doing. Then you become the parent, you realize that they've never done that before. So I'm learning on a daily basis. But I mean, one way that even we approach financial planning with our clients, the families that we work with, and something my wife and I regularly revisit is really going back and getting past goals. A lot of financial planners unfortunately lead with goals. Like, all right, what do you want to have and do in 30 years? And it's like, oh, I want to retire at 58, and I want to have a house in the mountains. It's like, all right, then we're going to plan for that. And suddenly that becomes the thing you're aiming for. But you never stop to ask, why do you want to retire early, and why do you want a mountain house? And if the reason there was like, oh, I want a house in the mountains so we have a place for our family to gather to make memories together, and I want to retire early so I can have more time with my kids. It's like, oh, you don't want a mountain house necessarily, and you don't want early retirement. You want time, and uh, uh, you want a place and time to gather and create moments and memories with the people you love. And if you focus on the goal itself, you are apt to miss the underlying value. So
Mm.
my challenge there is to continue to ask why, but why is that, and what is the underlying thing that serves and solves for, and to keep going there. So yeah, I think um, a lot of Bitcoiners tend to be busy, and it's because like very altruistic outlook on wanting to help people. Like, oh, if I learn more about this, I can help more people, and there's a lot of opportunity in the space with, oh, I can set up a niche company that does this specifically with Bitcoin or whatever. So just taking inventory, like, why am I doing this? Be it your business, I'm saving money for this, or I'm doing these things. Can ask yourself why, have those conversations on a regular basis, and make sure that again you're going past just certainly going past just actions and going past goals and actually understanding the values. Um, yeah, that's
Yeah, that makes sense. I mean, I think for a lot of us, one of the main drivers to put so much time into learning about Bitcoin is, you kind of see this rat race of, you know, people are printing money that you and I go and spend our days working for, and the evil in that, right? And we want to create one in the short term, we want to spend more time with our family, but in the long term, we want a better money for our kids, right? To actually be able to be rewarded for the fruits of their labor in a fair way. So it's cool.
yeah.
I love where we're going. So um, I think that's all really I had. If I wanted to give you an opportunity, like Preston always does such a good job of, uh, where can people find you if they wanted to work with you? And yeah, any closing thoughts on anything you wanted to get out there? that I didn't ask about?
Yeah, we can find me. I mean, I'm on Twitter or X. It's Jim Krider TX is in Texas. Our website, it's intentional living FP as in financialplanning.com. You'll see my calendar on there. If you want to throw 15 minutes on there, if you want to talk about if we should work together, that's great. Or if you just have a random one-off question of like, hey, if I can just, what is this? And I'm more than happy to spend that time talking with you and helping you in any way I possibly can. Um, yeah, happy to chat. If there's anything I can do to help.
All right. Thanks for listening to the Bitcoin Suits podcast. A big thank you also to Jim Krider for joining us and sharing how he's helping clients navigate financial planning with Bitcoin in mind while staying grounded in his fiduciary principles. If you'd like to learn more about Jim or his firm, you can find him on X at Jim Krider TX or visit intentionallivingfp.com. If this episode was helpful, please subscribe and share it with a fellow advisor or maybe even your own advisor or CPA who's starting to ask their own questions about Bitcoin. And one last reminder, this conversation is for educational purposes only. It is not financial, legal, or tax advice. All right, we will see you next time. Thanks.